Thank you so much. We really appreciate this opportunity. And I'd like to introduce Jerry Knight, who is a familiar face to many of you as having been a former Property Tax Division Director, and we do retain him as our property tax consultant so that I can send him bills that are introduced and ask him what they do to the property tax, and gives us many advice on those matters. We very proudly represent the 444 elected county officials in West Virginia. Those are your county commissioners, your county clerks, your circuit clerks, sheriffs, assessors, and prosecuting attorneys. And I'd just like to point out we have two commissioners here today who are on after us, Nancy Cartmill from Cabell County and Jack David Woodrum from Summers County. And we have two assessors here, Eddie Young from Fayette County and Harry Funk from Preston County. So the information from me is in a handout that I provided, and if you have any questions, this is pretty much the extent of my knowledge. The questions can go to Jerry or to some of our guests here. I hope to offer today possibly some counterpoints to those who feel that if you take away the business personal property tax, they will come. After listening to the presentations on May 18th, one statement really stood out to me. Priorities that matter are often the very thing that tax revenues fund. Setting your priorities or objectives, as one speaker emphasized on May 18th, is very important. In other words, what is hoped to be accomplished by this tax reform? If the objective is economic development and jobs, revisions to our tax structure are one factor of several, as many of our speakers have pointed out. As the experts stated at the last meeting, and our experts have stated today, we recently held 4 regional meetings where Dr. John Deskins from WVU gave an economic forecast. And after giving the forecast and an overall view of our economy, he provided some insight into 5 jobs that are facing the state to achieve economic growth. And I want to review these just as a reminder that tax reform is just one factor. Job 1 was small business growth and development to provide economic diversification. Job 2 was investing in our human capital, from education to health. We have to look at our demographics in order to understand the investment in human capital. Our labor force participation rate is dead last in the country. The national average is 63%, and we are at 53%. And we have been since the 1970s. This statistic is constant in every age category. Our disability rate is also dead last in the country for the working ages of age 18 to 64. The national average is 10.5%, and we have a disability rate of 18%. Job 3 is recognizing that a one-size-fits-all economic development strategy will not work. Job 4 is evaluating our tax and regulatory systems, as the previous speaker said. And Job 5 is ensuring that West Virginia is open to the world and aggressively pursue export opportunities in the global economy. Also at the May 18th meeting, an observation was made that although West Virginia has eliminated business franchise tax and reduced corporate net tax, we have not seen the anticipated business growth. I'm afraid the same may happen if we reduce or eliminate commercial personal property taxation without efforts to address the other factors that I just described. First of all, what are we talking about when we use the phrase commercial and industrial or business personal property tax? I provided a chart in your handout that shows 4 categories of personal property taxes, all of which come under the heading of commercial and industrial personal property. And then there's additional, more detailed information on business personal property taxation prepared by Jerry Knight that's also included in your handout. But for example, inventory tax has been described as a disincentive to growth or even as a job killer. It currently provides $68 million to counties and schools. Approximately 66%, as the tax department said this morning, I have 70% in my notes, but approximately 66% of all those totals you see on that chart goes directly to schools. And the question that has kind of been the question of the day, if it's eliminated, what would replace it? Machinery and equipment is nearly $164 million. And again, the question of the day, what would replace that? Would a business locate to West Virginia simply because those taxes are eliminated, or would factors like workforce and adequate infrastructure be more important? Then we have salvage value as a category. I prefer to call salvage value the end run around our Constitution. Not one presenter at the May 18th meeting pointed out, it has been pointed out today, but at the last meeting it was not, elimination of any of these business personal property taxes would require a constitutional amendment. Salvage value is currently applied to pollution control facilities, special manufacturing production property, qualified capital additions, special aircraft properties, and high-tech business properties. The use of salvage value for those categories has resulted in a reduction in business personal property taxes for tax year 2014 of $100,170,000. So we have left that amount on the table. I think a good question to ask is, what have we gained from those businesses receiving that very preferential tax treatment of 5%? Then you have a public policy dilemma, and this has also been alluded to today. We all pay personal property taxes on our individual vehicles, regardless of our income. Would the single mom or dad or the minimum wage young adult have much interest in supporting a constitutional amendment that allows equipment owned by businesses to be exempt, but their own cars are not? Therefore, you might have to consider that exempting personal vehicles to make a constitutional amendment more assured of passage would cost counties and schools about $75 million. Now that figure that I put in my handout is cars, but I have since talked with the tax department, and all individual personal property, including cars, motorcycles, and so forth, would be $118 million. They just did some updated their calculation. If you add to that other items of individual personal property, like mobile homes on leased land, that becomes $133 million that is currently paid in personal property taxes. I put another chart in your packet that has blue and green bars. It shows that West Virginia is not an outlier in taxing commercial personal property. There really isn't any evidence that that alone actually kills growth and economic development. If we do away with it, again, where will it shift? Would it shift to business real property? Right now, business real property is one of the lowest in the nation. As shown in Mr. Knight's report on personal property taxation, the percentage contribution of the total taxable assessment base has already shifted away from class 1, 3, and 4 properties, which are predominantly business properties, onto class 2 properties, which are our homeowners and our farms. So there's already, a shift is already occurring. We were provided some specific questions to answer. I want to go into those a little bit now. What local needs remain unmet? My answer to this question goes back to my earlier comment that we must recognize a one-size-fits-all strategy will not work. It really depends on who you ask, and I think you can look among the committee members here. Unmet needs in the southern coalfield counties would be vastly different than the eastern panhandle, just to give an example. What is the present capacity to generate revenues? Counties are totally dependent upon property taxation. It's our only major source of revenue, both real and personal. We don't have any taxing authority other than what the legislature provides. A county can impose up to a 6% hotel occupancy tax, for example, because the legislature has authorized us to do that. but the legislature has also limited its use to certain purposes. We can impose a fee on landlines and cellular phones for 911 services because the legislature has authorized us to do that. But the revenue is also limited for specific purposes. So those are just a couple of examples. We really have no inherent taxing authority. Property tax is constitutionally limited. And this occurred in 1932 after the Great Depression when people were losing their homes due to inability to pay their property taxes. That is when the four classes of property were created, the same four classes we still use today, and a maximum levy rate was set. Now I want to repeat, a maximum levy rate was set in 1932. It's still there in Constitution and again stated in statute. Currently, 30 counties are at the maximum levy rate. Then in 1982, the assessment rate of 60% was also set in Constitution. However, there's a little known provision in our Constitution. It provides the legislature with statutory authority to increase the assessment rate up to 100%. This action would require a supermajority vote of 2/3 of both the House and the Senate. And that issue has come up today, so the legislature does already have that authority provided by Constitution to change the 60% to 100% statutorily. Another question was, in order to cope with limited capacity to raise revenue, have jurisdictions relied on revenue sources that approach the limits of statutory authority? Counties simply don't have the authority to raise revenue other than by voter-approved levies, and those have been discussed a lot today. I really can't think of any means or ways in which counties are stretching the envelope because we really don't have much of an envelope. So I couldn't think of any examples. We have one county that has an operating levy, and it's a voter-approved levy in Work County to help them provide basic services. In what ways are local taxes or the administration of local taxes antiquated, inefficient, anti-competitive, unfair, or overcomplicated? And what are your ideas to remedy such problems? My counterpart for cities, Lisa Dooley, and I were talking about some of these questions this morning. We decided if we had the answers to a lot of these questions, we could be really wealthy consultants. So I wish I had the really definitive answers for these. But I would advise first that terms such as anti-competitive or unfair really depend on who you ask. Are property taxes complicated? Yes, they are, particularly because they are entwined with our Constitution. Are property taxes unfair? Our Constitution requires fair and equal taxation in reference to property taxes. It could not be more clearly stated. What might be seen as unfair are the preferential tax treatments such as salvage value, which again leave a little bit of tax there to keep from having to do a constitutional amendment. And I might point out it has never been challenged in court as to whether salvage value is actually constitutional. This question alone could be the subject of an entire day's session because property tax is a labor-intensive form of taxation. And the administration of it also includes the subject of collections, and we haven't even addressed collections of property tax. Another question is, what state taxes are shared or levied on behalf of your local government or other interests of local government? I always find that my colleagues in many other states who run county associations spend very little time monitoring they spend a lot of time monitoring their state budget, whereas I spend actually very little. Counties simply do not get a piece of the budget pie, other than schools, but the money to schools, I want to point out, does not go to county government. In other states, they actually have more of what we might call revenue sharing or local share that comes directly from the state budget to counties. We do get severance taxes on coal, oil, and gas from the state, and we get a portion of lottery revenue from the state, but the distributions are set in statute, and they are subject to variations based upon amount collected. And certainly we are seeing and experiencing the downturn in severance tax and lottery revenue. But they are not subject to the budget process, and because they're set in statute. I have a very simple change that would mean a lot to counties. For several years, we have introduced a bill that would allow counties to keep all the transfer tax that is collected by the county. Currently, half of that amount is sent to the state. It's about $8 million. It isn't much in terms of the state budget, but for individual counties, it could be a meaningful source of revenue to defray jail costs, for example. That could be one use of it. But that's just one little item where we collect the tax and then we send half of it to the state. Another question, municipal B&O and business personal property taxes have been held out as especially anti-competitive and detrimental. What are your ideas for reforming these? Well, again, that's a question with an almost predetermined conclusion built into it. I would urge that you find specific evidence that business personal property taxes are anti-competitive and detrimental. Identify the businesses that have chosen not to locate here for that reason, and then decide to whom you want to shift the burden of the taxes. Study the personal property categories to which salvage value is applied. Again, they're all but exempt at 5%. What growth has occurred there? What economic development has been achieved through the use of salvage value? West Virginia has one of the lowest total property tax burdens in the country, almost every way you analyze it. Therefore, my advice would be to first identify the problem. Is business personal property taxation really the problem? I know businesses don't like paying it. None of us like paying it. We don't like paying it on our cars, but is it really the problem? Our property tax system has a broad base, low rates, and equality. If business personal property tax is eliminated, the overall effect for everyone is that the base is narrowed, rates for someone or something will be higher, and inequality. Another question, what responsibilities of state government should be devolved onto local government? I think the question would be a little better stated. Are there any current responsibilities of state government that could be done more efficiently and effectively by county government? The answer is probably so. As other speakers have said, we are a very centralized state, probably the most centralized state in the country, so that the state does many functions that in other states, counties and municipalities do. But we are not provided the funds to provide these services, so without the funding, it's simply an unfunded mandate from the state to county government. Counties are already creatures of the state. Our responsibilities are in Constitution and statute. We have no inherent authority to do other things other than what is given to counties by the legislature or by Constitution. I know all of you know this, but just to reinforce, and this is just a short list, currently counties prosecute the state's cases, we enforce the state's laws, we collect the taxes that provide at least 25% of school funding, we administer the state's elections, we maintain and preserve the state's records, we provide for the state's court system and maintain and preserve its records, we respond to citizens in emergencies, we provide for water and wastewater infrastructure, we pay for the state's jail system, and many, many other responsibilities. New responsibilities, both large and small, are added in every single legislative session. There's really not much more you could have us do without providing the means with which to do it. And I want to stress that a county's first and foremost responsibility is to run its county offices and of course, maintain the courthouse. Anything above and beyond that is gravy, so to speak, but they have to make sure their constitutional offices and those responsibilities are funded. How is local government planning for structural changes to the economy that presently appear to be worsening, such as the contraction of mining and gaming industries? I think we should all work together and ask, how are we all planning for it? How is the state planning for it? How is county government planning for it? How is municipal government planning for it? We might even add, how is the federal government planning to help us? We could add also to that, how is the state planning for our aging population? How are we planning for our poor state of health? There's a lot of things that we could be working together to plan for. I often tell our county officials that real solutions are going to have to come from us. We don't see much guidance from the federal government, and we need to work in partnership with the state. It's hard for counties to plan when the current conversation on tax reform is eliminating taxes that go to counties. And so far, while the question has been asked, nothing has really been identified to replace that revenue. That's a tough question. County governments in partnership with other local governments are really where change could happen. I put an article in your packets about our National Association of Counties working with coal counties across the country for diversification of their economies. They recently had a meeting in Pikeville, Kentucky, and a team from McDowell County attended. There will be one in Colorado and another one here in Charleston in November. So I feel that our National Association has recognized that at least the coal counties are going to have to work to diversify their economy. One reason I wanted to point that out is that our counties have very little recourse when the economy suffers. So coal is a very good example of that. The decrease in coal severance tax is also accompanied, as you could imagine, by a decrease in both real and personal property taxes from those businesses. The decline is in severance, personal, and real property taxes. So it is really a double or triple whammy to counties' revenue. The assessor cannot simply decide to raise everyone's values. And I want to point out that I put in my paper that the assessor cannot decide to raise property taxes. The assessor values, they do not tax. I need to make that distinction, as they often remind me, right? The county commission could put an operating levy on the ballot and hope that it passes, or raise the levy rate if they're not already at the maximum. But again, little to no recourse when these downturns occur, and considering how major the downturn has been in coal. I know all of you read about Nicholas County, which had to lay off several employees due to the loss of severance tax, and we need to work together to stop this and find other ways to make up the revenue and grow their economies. That's why we do agree that planning and working together with state government is needed. It's unlikely these trends will reverse, and I would offer to you that we are willing and able to work with state government in partnership, but ask that you look at several questions before you go forward. I do ask myself as I listen to speakers, if everyone is doing it, which is eliminating business personal property taxes, does it give us a competitive edge? I mean, or are there other ways we could stand out? Should we be thinking more about wise and productive use of the tax dollars we have? Businesses look for great schools. They look for state-of-the-art infrastructure. They look for lifestyle choices that are healthy and that attract young people. They look for amenities in our communities and quality of life issues. All of those are either provided by tax dollars or the building blocks for them are provided by tax dollars. County government already makes efficient and effective use of the approximately 28%, something like that, of the property taxes that we actually get to keep. We are the closest government to our citizens and can more readily respond to economic development needs. And I emphasize, I have always felt strongly that we are a partner to the state. To radically reduce property taxes with no stable and reliable replacement would make counties dependent on the state. And I'd be sitting in those budget committee meetings looking for a piece of that budget pie that we do not do right now. That's not a stable source of revenue because it would be subject to the whims of changing legislative philosophies and changing executive philosophies. So we urge you to move cautiously and realize that there are many factors that create a climate of economic opportunity and job growth, and recommend that you answer these questions. What is the objective? Will tax reform actions achieve the objective? If current business personal property taxes or a portion thereof are reduced or eliminated, what will replace it? I know you're really getting tired of that question. To whom will the responsibility shift? And will citizens support constitutional amendments that may result in a shift to them? Thank you.